What is going on, everybody? Welcome back to yet another video. In today's video, I have a very special video for you guys. As promised, the Fibonacci video is finally here. In today's video, I'm going to be showing you exactly how to use Fibonacci retracements and extensions. This is going to be a very informative video. It's probably going to be one of the longest that I have on my channel. So make sure you guys grab a notepad, make sure you grab a pen, and as always, make sure you guys are subscribed. And if you find value in this video, make sure to smash that like button and comment down below letting me know. But yeah, I'm super excited, so let's hop right into the video. Alrighty, so like I said, we're going to be discussing Fibonacci retracements and extensions. We're also going to be going over entry criteria as well as stop losses. I made some slideshows for you guys, but we're also going to be looking at a lot of different charts, and I'm going to be showing you guys exactly how to draw these areas, how to use the Fibonacci retracements, and so much more. But yeah, I am super hyped for this video. So let's start off with the slideshows. And again, we're going to be flipping back and forth from the slideshows over to the chart, but this is pretty much going to be the best Fibonacci trading video that you will ever watch. So first, we're going to start off with what is Fibonacci. So Fibonacci retracement levels stemming from the Fibonacci sequence are horizontal lines that indicate where support and resistance are likely to occur in the market. Through using the retracements, we can predetermine where an asset may experience support or resistance, which as a result can help us with trade planning and trade management. So first, we're going to be looking at the Fibonacci retracements, and then later in the video, we'll be looking at the Fibonacci extensions. So Fibonacci, each level is associated with a percentage. The percentage is how much of a prior move the price has retraced. Again, we're going to look at a lot of different examples. The Fibonacci retracement levels are 23.6%, 38.2%, 61.8%, and 78.6%. We're going to be looking at how these numbers even came into play. They're not just random numbers. So I'll be showing you that. While not officially a Fibonacci ratio, 50% is also used a lot in Fibonacci retracements, and it's a level that I like to pay very close attention to. So this is what the Fibonacci sequence is. If you guys want to look up more about Fibonacci, he's a famous Italian mathematician, found if you add a certain sequence of numbers up in a certain way, it applies to many things in life. If you want, do your research on it. It's actually really interesting. But through the Fibonacci sequence, we can apply that to our trading. So the Fibonacci sequence, it's actually very simple. It starts off with 1 plus 1 equals 2, 2 plus 1 equals 3, 3 plus 2 equals 5, 5 plus 3 equals 8. If you guys know about my EMA sequence, you know that I use the 5, 8, 21, 34, 55, 89. This is how those come into play right through the Fibonacci sequence. So literally all you are doing is you are taking the previous sum number, so in this example 3, and then adding it to the second number right here. So then you get 5 plus 3 equals 8, 8 plus 5 equals 13, 13 plus 8 equals 21. Again, this is super interesting stuff if you do want to do some extra research on it. But this is how the percentages come into play, is through this sequence right here, as you are going to see on this slideshow right here. So this is how the ratios are calculated. The key Fibonacci ratio of 61.8%. Again, this is a very important level that we're going to be looking more into later in this video. But the 61.8% is found by dividing one number in the series by the number that follows it. For example, if you take 21 and divide it by 34, you are going to get 0.6176. Round that up, what do you get? 0.618. 55 divided by 89 is about 0.61798. Round that up, you get 0.618. And the more that you start dividing these Fibonacci numbers, you're going to notice that a lot of them line up at around 0.618. The 38.2% ratio is discovered by dividing a number in the series by the number located 2 spots to the left. Just bear with me, this might get a little confusing. For instance, 55, which is a Fibonacci number, divided by 144 equals approximately 0.38194. Rounded up, what do you get? 0.382. And then the 23.6% ratio is found by dividing one number in the series by the number that is 3 places to the right. Again, getting a little confusing. But 8 divided by 34 equals 0.23529. So that is how these numbers come into play. It is simply by taking these exact numbers, part of the Fibonacci sequence, and you are just doing basic division between them. So that is how the ratios come into play. Now we're going to look at the actual utilization of this tool. I'm going to show you guys exactly how to draw it, and we're going to dive more into those Fibonacci retracements. So starting off with just a basic picture, and then we're going to hop on over to the chart, how to draw Fibonacci retracement. As you can see in this screenshot, I believe this was a 1 hour on QQQ. I took this high point right here to this low point right down here. And you can see that the Fibonacci retracements were automatically drawn on the screen. This lets us know where possible resistance can be in the market. So a little different than your basic support and resistance, where you have to go on the chart and you have to locate where those support or resistance points are. With Fibonacci, all you're doing is taking a clear-cut pivot high and pivot low and then drawing them, and then it will automatically let you know where potential resistance or support will be. So if we head on over to the chart, and we can actually look at a really good example of QQQ today, I do want to talk about how to find well-defined pivot low and pivot highs. As you can see on my screen, I have the 50%, 61.8. We're going to talk about the importance of those two here in a little bit. But if we go to a clean chart, we can use this one right here, and we can just go to a daily time frame, make sure all of this is clean. What you need to do in order to use Fibonacci is you need to have a well-defined pivot high and pivot low. Now, when it comes to identifying pivot high and pivot lows, it's the highest point of price action before a move down, and then the lowest point of price action before a move up. So if we're looking, we can go to a weekly time frame so it's a little cleaner. If we go to a weekly time frame, and there's different points where you can draw your Fibonacci retracements as well. And again, we're going to go over all of that in this video. But as you can see, if we're just looking at this one right here, you can see that this was the highest point of price action before a strong, aggressive move down. Eventually, we bottomed out right here. This was the low before a strong, aggressive move back up. As a result, you can draw your Fibonacci retracements from this pivot high to pivot low right here. There's also a high point right here, the highest point of price action before a strong, aggressive move down. And then the low point right here, the lowest point of price action before a strong, aggressive move up. As a result, you can draw your Fibonacci retracement from this pivot high to pivot low. Same thing here. The highest point of price action before a strong, aggressive move down. The lowest point of price action before a strong, aggressive move up. That is where you can draw your Fibonacci retracements. So whatever platform that you are using, all of them are going to be different. If you're on ThinkorSwim, if you find this little percentage sign right here, you want to make sure that it says Fibonacci retracements. Every single platform will say Fibonacci retracements, so that's all you have to locate. But once you find that and you identify your pivot high and pivot low, I call them clear-cut pivot high and pivot lows. So a good example, again, is this one right here, the highest point of price action, all the way down to the lowest point of price action before the strong, aggressive move up. And as you can see in this QQQ example, price went right up to that 61.8% retracement, could not hold above it, and then gave the next leg down in the market. And then real quick, in case you guys did not know, I do have a 450-page book on Amazon titled The New Age of Technical Analysis. And in this book, I go over my entire day trading and swing trading strategy, how to find bounces, rejects, support and resistance, all the indicators I use, and so much more. So if you guys do want to check it out, again, The New Age of Technical Analysis, 450 pages. The link will be down in the description. Now, again, there are many different Fibonacci ratios that you can use. You can use the 23.6, the 38.2, the 0.5, the 0.618, and if you want, you can use the 0.786. Again, I will be talking about all of these different ratios and why I mainly pay attention to the 0.5 and the 0.618. But we are going to use all of these on the screen right now. So as you can see, as price started to drop to the downside, it had a little bit of resistance here at the 38.2. I'm sure we got some price action at the 50, and then we really got some price action up here at the 61.8. So that is just one example of your clear-cut pivot high down to pivot low. Like I said, we had another one right here, clear-cut pivot high, pivot low before the strong aggressive move up. As a result, you can draw your Fibonacci retracements, and this is going to let you know possible resistance points to keep on watch for QQQ. So again, took the clear-cut high down to the clear-cut low. As you can see, the very first time price hit the 38.2, it rejected and came back down. As it came up to the 50%, rejected right here, rejected right here, rejected right here, and then it came right back down. And then price looks like it just ignored that 61.8 this time. Again, one thing that you do need to keep in mind when using Fibonacci, it's not going to have price action every single time. You need to have entry criteria, which again, we will be talking about in this video. I'm going to try to make this video at least 1 hour for you guys and give you guys the absolute best education when it comes to using Fibonacci retracement. Now we can take one more look at a clear-cut pivot high to pivot low. We had one from here right down to here, and if we actually break this down to a daily time frame and go back, I want to see how we reacted on the daily to these levels. So if we just put on a daily time frame right here and we go back, we can see that we had a little bit of resistance right here at this 38.2, broke above the 50, got very close to that 61.8 before it started coming back down. So that is how you are going to draw your Fibonacci retracements. It doesn't matter what time frame that you draw these on. Again, we're going to discuss more of that here in a little bit, but you can find Fibonacci retracements on the weekly. You can find them on the daily. You can find them on the monthly. A really good example on the monthly, and this is actually going to lead us into the next point, because in the last few examples, I was showing you guys on how to draw the Fibonacci retracements for potential resistance points. You can also use the Fibonacci retracements to identify potential support points. So if we head on over to a higher time frame on the monthly and we look at the sell-off that we had back in 2020, you can see that the lowest point of price action was at 164.93 before this very strong aggressive move to the upside, where price eventually topped out at 408.7 and started to pull back. Now on a monthly time frame, this is our clear-cut pivot low. This is our clear-cut pivot high. What can we do? We can take a Fibonacci retracement, take this pivot low to pivot high right here. And as you can see, we had support at the 38.2% retracement before a nice aggressive move back up. We had price action at the 50% retracement, and the low of last year was right at that 61.8% retracement. We can go on over and look at SPY. SPY bottomed out, I believe, right at the 50% retracement. So again, take that pivot low to pivot high. The low during the 2020 sell-off down at 218.95 all the way up to the high of 480. You can see price bounced at the 38.2, had a nice move up, and then it bounced right at the 50% retracement, and that was the low of 2022. And we'll take one more look at how to use this for support points. So if we just zoom in right here, we can see that price ended up bottoming out at this 348.11 point before a very strong aggressive move up. Now, as price eventually topped out, and when it comes to identifying where these clear-cut pivot low and pivot highs are, you don't know that they are the low or the high until the following candles. So we did not know that 348.11 was the pivot low until, the next few days as price started pushing back up. Or you didn't know that this was the high until the following couple days as price really started to pull. So as price started to pull back on this candle right here, that would confirm that this is your pivot low to pivot high. And as a result, what do we want to watch for potential support? 38.2, 50%, 61.8, etc. And then from there, price bottomed out at the 50% retracement, and it pushed all the way back up into a new high of around 402.50 before finally pulling back. So again, when it comes to drawing your Fibonacci retracements, you can draw them on many different time frames. It could be a 1 hour, it could be a daily, it could be a 5 minute, it could be a 10 minute, 15 minute, 30 minute, whatever it may be, but you need to have a clear-cut pivot high and pivot low in order to draw your retracements. One thing that I do want to throw in is you need to draw them from wick to wick. I see some people draw them wrong using the body, so we're going to be looking at that here in, I think it's in a couple slides. But like we just discussed, how to draw retracements for bounces, you take that lowest point of price action before the strong aggressive move up. As we start topping out and price pulls back and confirms that this is the high, that is when you can take the pivot low to pivot high, and then you're watching these areas for potential bounces. This can help us for swing trades, and it can help us for day trades. And as you see in this example, QQQ bottomed out right at that 78.6% retracement before it gave the next leg up all the way up into a high of like 317.4. And this was on a 5-minute time frame. Actually, this was an intraday fib. Alrighty, so now discussing these retracement zones further in depth. I know we had a few other zones on there, the 38.2, the 23.6, but the main zones that I pay attention to are the 50% retracement, the 61.8% retracement, and the 78.6% retracement, the main two being the 50 and the 61.8. Again, we'll come back to that here in a minute. But the 50% and the 61.8% retracements are the most common retracements a stock will retrace before continuing in its original trend. The 78.6% is the deepest a stock can pull back before changing its trend. The reason why I want to focus more on the 50 and the 61.8% retracement is because if those are the most common, that then puts the probabilities in our favor. Personally, in my experience, yeah, we had that price action at the 23.6 or the 38.2% retracement, but in my opinion, it's not as high probability. That's why I don't pay attention to it. I want to stick to the most high probability retracement areas, which again is going to be that 50% and the 61.8%. And those are where I personally notice the highest probability setups being offered. Now, also with the 78.6% retracement, it also serves as a good stop loss point if you're using a smaller time frame fib. Again, we'll come back to that here in a little bit. Like I say down here, other retracements I do not use due to the probability. So now we're going to talk about how to correctly draw these things. Again, not using the candle bodies, only using the wicks. So if we head back on over to the chart, this is the wrong way to draw your retracements. I've seen people do it where they take like the body and then they'll take it up to the high or something like that. That's personally not how I draw it, because you got to imagine with the wicks, you got to imagine that this is how low or how high that price went during that time period. If we're ignoring the wicks, then we're ignoring key market information. So if we take the pivot low to pivot high in this scenario, this is the correct way to draw your retracements. If you're taking the body to the body, that is not the correct way to draw your retracement. Again, it doesn't matter what time frame, you always want to use wick to wick, and that's how you find the correct Fibonacci retracement zone. So remember and make note, wick to wick. So why do I love Fibonacci? Fibonacci gives us exact price points to watch and potential support or resistance areas or bounces or rejects, which is what I personally use Fibonacci for. In my experience, these levels are very respected. So if we head back on over to the chart, if you're using just basic support and resistance, this is more so just where you see the support or resistance is at, if that makes sense. So to find your support and resistance points, you have to actually look at the chart and you got to say, okay, this is support, which I mean, this is a very strong support point, 410.2, but everybody's going to draw support and resistance different. Maybe you see support right here. Maybe the next person sees support right here. So support and resistance is drawn based off of where you actually see it. And if there's a lot of other market participants that see that exact level, then there's going to be price action at that level. But if you're overthinking it, you might start drawing support and resistance at places that aren't really support and resistance or areas that people aren't really watching. So because of that, certain support and resistance points can be a little questionable. Or if you're somebody who likes to use supply and demand, I personally like using supply and demand only when it does apply to where price is currently trading. The only issue is with supply and demand, it's such a large zone that you want to pay attention to. So like right now, really good example of the NASDAQ on the daily time frame. There's daily supply up here. So as we see, this is the supply zone on NQ. If you guys want to learn how to draw supply and demand, make sure to go watch my video. The link will be down in the description. But that area is all the way from 13,503 all the way up to 13,575. That is a very large zone to try to determine where is this thing actually going to reject. That is why I personally love using Fibonacci, because all I have to do, doesn't matter the time frame, I can look at the 5-minute time frame. Oh, there is a clear-cut pivot high to pivot low right here. Let me use Fibonacci retracements and let me watch the price action as we start coming up towards the retracements. So I know exactly to watch 13,456.32. 13,449. Or if we head on over to QQQ on the weekly time frame and we just delete all this, take pivot high, pivot low right here. An area I've been telling everybody to keep a very close eye on is this 327 level. And what have we rejected these last 2 days? 327. Or the first time we came up to reject the 50% retracement. We know the exact levels to watch when using Fibonacci. That is why I personally love using it. So now let's start discussing Fibonacci on different time frames. So for these examples, we're only going to keep the 50 and 61.8. Again, that is where I find the most common retracements to be. We will come back to the 78.6, but for now, it's just going to be the 61.8. and the 50% retracement. So when starting my day, because I mainly trade SPY and QQQ, I'm always going to start on the higher time frames. Every single morning, I start with a clean chart. So because right now we are very close to a weekly fib level, I will start using this pivot high to pivot low right here and just deleting the 50% retracement and keeping the 61.8. We'll talk about the invalidation of fibs here in a little bit, but as you can see, price is way above the 50% and 61.8% retracement. Therefore, I don't want to use it. What you could do is put on that 78.6 and see how price reacts to it. But because it's already above all those areas, I don't care about that pivot high to pivot low or pivot low, pivot high. And then the only other one we have on the weekly is from this high point to low point right here. And you can see the next retracement, the 50% retracement, is at 331.50, which is close to where price is currently trading. The 61.8% retracement all the way up here, I don't really care about it right now, just because it's all the way up at 350. Now, one thing that I do want you to keep in mind, because I forgot to bring this up earlier, is you can see that I took two different pivot highs all the way down to the same pivot low. You can do this. We're going to talk more about this here in a minute. But when price was trading all the way down here, you could have done the same thing and used this high down to this low right here. So because this is like the lowest point of price action, you can actually take those different high points all to the same low. Or if price ends up topping out, we're just going to delete all this and then I'll put the retracements back on. But if price started to top out, let's just say right here before pulling back, you can take two different lows, three different lows, four different lows, however many lows it is, to the highest point before price started pulling back. So you could have taken this low to that high or this low to that high as well. And as you can see, we get different retracement zones that we can watch. Again, we will be looking more at this here in a little bit. But going back to when I'm actually drawing this, like I said, I'll start on the weekly. After that, I'll break it down to a daily. Are there any other clear-cut pivot high, pivot lows that I can use? The only clear-cut pivot high to pivot low was here to here. And as you can see, price just destroyed all of those retracements. Therefore, that pivot high to pivot low isn't applicable anymore. Hopefully, I just said that word correctly. If price were trading over here, and again, this was the high to the low right here, then we start taking this pivot high to pivot low. And as you can see, we rejected right off that 61.8 before price started pulling back. And then as price started pulling back deeper, you can still use this pivot low to pivot high right there. And as you can see, we bounced right off that 50% retracement. There's so many different time frames that you can use the Fibonacci retracements to identify key areas of price action. So if we're just looking at current price right now, if we were to delete this right here, if price were to actually top out up here at like this 327 area, then there's a couple different pivot low, pivot highs that we can use on the daily. We have this pivot low to pivot high right here, and then we have this pivot low to pivot high right here. If price really started pulling back, I would be watching these areas right here for some potential bounces. Now, for those longer dated Fibonacci's, you could use here to here, but price would really have to start pulling back if we were going to use that. So the only two that actually apply right now are here to here. And again, that's only going to happen if price starts pulling back. And also make note how I took two different lows to the same high point for different potential bounce areas. While we're seeing this, I do want to bring up that the longer dated that those retracements are drawn, like this one was from 5.4 up to 5.12, and then this one was from 4.25 to 5.12. Since this one was drawn further back to the current high point, that's going to be a higher probability bounce area. Hopefully I explained that correctly. If not, comment down below. I will answer that. But those longer dated Fibonacci retracements are always higher probability. So once I'm done on the daily, I'll then start breaking it down to a 4-hour time frame. So we have the rejects right here. We have the bounce right here. There's also other areas that we could use for a potential bounce. We had this clear-cut pivot low to pivot high right here. And where was the exact bottom on Friday? Right at 322.91. Price bottomed out and then had a nice rally to the upside. So when using Fibonacci retracements, I personally keep pre-market and post-market sessions on. Again, if you're ignoring the pre-market and the post-market, you are missing out on key information. So taking that pivot low to pivot high right there, 61.8 was the bounce area because price already broke through and invalidated the 50. I don't really care about that. If price were to come back down to 322.91 today, that is an area that I would look for a potential bounce. However, if price invalidated and broke below 322.91, I would simply delete it and then watch these bounce areas down here. Now, because going into the open today, let's just ignore everything to the right of this line right here. You can see that price had a pretty solid drop to the downside. So what you could do is take this pivot high to pivot low right here, and you could watch the 50% or the 61.8% retracement for a potential reject. Now, I do want to see if we actually ended up bottoming out at the 61.8 first, and then we actually hit the high of the 50% retracement on Friday before the market ended up closing. So again, just taking that pivot high to pivot low, right at the 50% retracement. As soon as price started breaking above it, it's invalidated. I'll take it off of the chart. And then as it came up to the 61.8, broke through it, it became invalid, and I would delete it from the chart. So after I'm done finding potential areas of rejects and bounces on the 4-hour time frame, I will then go to a 1-hour time frame. And on the 1 hour, you can see that we had one different zone that we could end up using, and it was this pivot low to pivot high right here. And you see price broke below that 50% retracement. Because price started breaking below that 61.8% retracement, depending on the time frame that you're using to validate your trade. If you use the 5-minute time frame, this actually did validate the trade, and we'll come back to that here in a little bit. But it all depends on the time frame that you're using. The 10-minute time frame actually validated the setup as well. The 15-minute time frame validated the setup as well, and the 30-minute time frame validated the setup as well. So again, it depends on what time frame you are using to validate the trade. We are going to be going over confirmation signals for entering when using Fibonacci here in a little bit. After I'm done plotting all of my Fibonacci retracements on the daily time frame, weekly time frame, if there are any, 4-hour time frame and 1-hour time frame, that's when I start looking for intraday Fibonacci retracements. I don't draw those larger time frames on anything lower than a 1 hour, so I don't use the 30-minute when trying to find Fibonacci retracements. But during intraday trading, I will use a 5-minute and a 10-minute time frame. So as price starts trending down, you can see that this was the highest point of price action before price bottomed out and started pulling back up. One thing that you need to keep in mind when it does come to these Fibonacci retracement areas is price did just bounce off of a 1-hour retracement, which is going to be much stronger than a 5-minute retracement. So if you tried to take the 61.8% reject right here, it did not end up working out with QQQ. So the higher the time frame the retracement is drawn, the more important it is going to be, and the larger the reaction is going to be as well. Other than that, I'll look at the 5-minute, I'll look at the 10-minute for any intraday Fibonacci retracement areas that confirm what I am currently seeing with the price action. But I would say a majority of the bounces and rejects that I take using Fibonacci retracements are based off of higher time frame fibs because they lead to higher probability setup. Then we'll just do one more chart so you guys can see exactly how I go about breaking down the Fibonacci retracements and everything. So let's do this on, let's actually do it on SPY. So if we go on over to SPY, we can start again on the weekly time frame. We know that this low down here was a monthly fib. Again, we're going to see a larger reaction off of the higher time frame. So literally bottomed out on that 50% retracement right down here, had a nice rally to the upside. So if we're looking at SPY, you can see that we have multiple different pivot high, pivot lows that we can use. Pivot high, pivot high, pivot high, pivot low. So what we can start doing is taking pivot high, pivot low, pivot high, pivot low, and pivot high, pivot low. And you can see we broke above the 50 and the 61.8% retracement, invalidating it. Therefore, I'm going to delete it. We're looking at where price is currently trading at. We broke above this 50% retracement, therefore that is invalid. And we finally had a candle close above this 50% retracement, therefore that is invalid. So when it comes to SPY, there are two valid Fibonacci retracements that we can use right now. It is going to be this 418.50 area, and then all the way up here at this 429.60. As you can see, price has tested this area multiple times. On ES, it tested it multiple times. SPY tested it during the pre-market or post-market session multiple times. So if price is able to break above 418.50, the next area where I see a high probability reject on SPY is going to be all the way up at this 429.6 to 430 area. Now, if we break it down to a daily time frame, we can see that where price is currently trading, this was the highest point before price pulled back right here. So there's many different lows that we can actually use up to that high point right here. we could take this low to this high, we could take this low to this high, and we could take this low to this high. You can see that we pretty much bounced that 50% retracement right there, therefore actually increasing the probabilities that there will be a bounce at the 61.8. That is something I forgot to bring up earlier. If you draw a retracement and you have a bounce or a reject at the 50%, it then increases the likelihood of a bounce or reject at the 61.8% retracement. So overnight session, ES actually tested the 50% retracement, but that is where we ended up bottoming out before price pushed back up. So if price were to break below 403.50, I would then watch right here for a potential bounce. If we broke below there, I'd watch here. Break below there, I'd watch here. Break below there, I would watch here for potential bounces. So because all of those aren't valid right now, I'm just going to go ahead and clean up the chart a little bit. So now if we're looking at more recent price action, this was our clear-cut pivot high to pivot low right here. Pivot high, pivot low. Price started breaking above the 61.8% retracement multiple times, therefore it's not valid. I would simply delete it from my chart. And then after that, I'll break it down to a 4 hour. So what is applying right now on the 4 hour? Pivot low, pivot high right here, broke above, set a new high. So what you can do, pivot low, pivot high. That 50% retracement is still valid as far as a 4 hour time frame goes. Therefore, I would still pay attention to it. After that, we haven't tested the 61.8% retracement yet, so I would still keep 408 as a potential bounce area. On the 4 hour time frame, that's the only clear-cut pivot low, pivot high that I see. So then I'll break it down to a 1 hour. Is there any other pivot low, pivot highs that we could potentially use? And the only one that, actually, I don't even think we have one. There's not even any ones that apply on the 1 hour. I think, yeah, we broke above those retracements. We broke below this retracement right here. So there's not even one on the 1 hour time frame right now. So therefore, I wouldn't draw any, and I would look for intraday fib levels that we could potentially use. And that is how I go about drawing my Fibonacci retracements. Always start on the higher time frames and then break it down to smaller time frames. Okay, so now what do we look for when it comes to these Fibonacci retracements, and what is our entry criteria? We always want to confirm with price action that the level is valid. I'm not simply buying a call or a put just because price is coming up to a Fibonacci retracement or down to a Fibonacci retracement. I always want to use price action. I love to use the time and sales in level 2, which that's a different conversation, and bookmap. If you want to learn how to use bookmap, I got videos on that. Make sure you guys watch that, but always confirm it with the price action. So if we head on over to QQQ today, again, that 327 is a huge area that we need to pay attention to on QQQ. So if we are looking at this, and we can actually pull up recent trades that I have taken based off Fibonacci retracements. If we are looking at price action, again, as price starts pushing to the retracement, pivot high, rejection point, bounce point, doesn't really matter. But in this scenario, because it was a reject, price pushed up into it, and you can see with price action that this area is valid. As price pushed up, we had this very long upper wick to the upside, and price traded back down below it. Now again, going to the time frames, it really depends on what time frame you're using to confirm your trade. The smaller the time frame you use, the tighter your stop loss is going to be. The higher the time frame, the wider your stop loss is going to be. That's why you're going to have to position yourself correctly. So if we break it down to a 1 minute time frame, the 1 minute did confirm in this scenario. So this is personally what I really love to see. I love to use the 1 minute time frame to confirm my entry. So with the 1 minute time frame, you can see that price traded up into the area. It broke through and immediately reclaimed the opposite side with heavy 1 minute volume. If that ends up happening again, this is what I like to look for. This would confirm the short entry with your stop loss about 10-20 cents above this area. Now, if I'm sniping an entry like this on the 1 minute time frame, I am waiting for the candle close if I'm using the 1 minute time frame. So therefore, your entry would have been at 326.9 and your stop loss was up towards 327.2, like a 30-cent stop loss, and price dropped all the way down to a low of 325.57. So that is what I am looking for when it comes to actually confirming these Fibonacci retracements. If you're using a 5 minute time frame, probably going to want to wait for for a 5-minute candle close. There have been times where I wait for a longer time frame period to actually confirm the trade, because maybe the 1 minute doesn't confirm it, but we're still hanging around the area, and then the 5-minute confirms it. I'm going to have to base the trade off of the 5-minute time frame in that scenario. And again, my stop loss is going to be above or below the wick that pierces through and then reclaims. So on the 5-minute time frame, very long upper wick, 2 5-minute candles in a row confirm that downside was more than likely going to happen. You get your entry, stop loss right above 327. Go to a 10-minute time frame, you can see the 10-minute time frame confirm this thing as well. Got that little inverse hammer, and price ended up dropping significantly to the downside. So depending on the time frame that you use to confirm the trade, that is the time frame that you want to use when actually inside the trade, confirming your exits, take profits. Maybe you're seeing something on that specific time frame that's telling you to get out of the trade. Whatever it may be, that is the time frame that you want to stick to. And then real quick, I want to do a trade recap using the exact education that I'm teaching you guys in today's video. We ended up using the Fibonacci retracements in order to catch this trade to the downside. It was a reject of the 412 area. This was an absolutely beautiful trade, traded live, and I want to give you guys the education behind it, as well as another Fibonacci area that I did have on watch, but I didn't end up taking that trade. So that will be second. But with the trade that we ended up taking today, as we can see on SPY, we had this clear-cut pivot high right here. As we discussed earlier in the video, you need to identify the highest point of price action before price starts pulling back, and then the lowest point of price action before price starts pushing up. So this was an intraday Fibonacci retracement area. I didn't see any other good ones on the higher time frames, and because price was clearly downtrending, I was looking for a reject. Remember, when you're taking your pivot high to pivot low, you're looking for a reject. When you're taking your retracements from pivot low to pivot high, you're looking for a bounce. So looking at the chart right here, as we see, we have this high point up at 412.82, and then we have this low point down here at 410.7. So if we take the Fibonacci retracement from this high point right here down to this low point right here, there was actually 2 different ways that you could have went about this. Let's just say that you took this pivot high down to this pivot low. You can see that this time it hit the 61.8 before giving the next leg down. I wasn't looking at SPY at this time, but that ended up working out. The actual trade that we ended up taking was taking this pivot high down to this pivot low right here. So then from there, I told everybody that I was watching for a reject around 411.76 all the way up into 412. So then breaking it down to a smaller time frame, again, because I personally like to break it down to a 1-minute time frame to confirm my entry. As you can see, price had a really aggressive move to the upside and just broke right through the 50% retracement. It did not confirm a trade at all at that 50% retracement. So therefore, there was no trade when price hit the 50. Now from there, as we can see, price pushed up into the 61.8% retracement, and then it closed right below it. But now the thing is, look at this 1-minute volume. The way that I interpret when we see volume like this on the smaller time frames when price reaches the fibs is, one, buyers became exhausted in this scenario. That is very, very heavy volume to come in on a 1-minute candle. Look at all the other previous 1-minute candles and then compare it to where price is currently at, or right at a 61.8% retracement. So why does this candle, which is much smaller than this candle, have elevated volume? Buyers are becoming exhausted, they're selling into the level, and then there's also sell orders being hit right here. That is how I interpret the volume when we start reaching these areas of Fibonacci. Now on the next candle, this is where we ended up getting short. Price ended up breaking above that 61.8, and very quickly it came right back down. The volume was very heavy on the sell side, and we ended up getting short with our stop loss right above like 412.2, which was only 10 cents above this high right here. And we were able to ride this thing all the way back down into the lows, obviously trimming on the way down, moving the stop loss, and then eventually was stopped out in profits. So that was the trade that we ended up taking today using the exact education that I am providing in this video. Now, the trade that I did not end up taking was actually on Netflix. I want to show you guys how I found that area. I told everybody in the morning live stream that I was watching for a bounce towards that 331.89, and if price broke below that, then I'd be watching at 328, and I actually believe that was in the weekly watch list. So if we zoom out to the daily time frame on Netflix, you can see that this was the lowest point of price action before a strong aggressive move to the upside. Now from there, this was the highest point of price action before price started to pull back. Therefore, we have our clear-cut pivot low to clear cut pivot high. And we know that we want to watch that 50% and that 61.8% retracement as a potential bounce area. So then if we break it down to a 5-minute time frame, you can see as price came down and tested that area, look at the 5-minute volume right here. This could confirm an entry. This could confirm an entry as well. That 5-minute volume compared with that 5-minute lower wick, this lets us know that there are buyers at this area, confirming the trade, and your stop loss could have been 331.7, 331.6, a very limited stop loss. And then as you can see, price ended up pushing. Let's just say you entered at the close of this candle at 332.25, push all the way up into a high of 333.5. So those are two examples, one of them that we traded today, the other one was something that I was watching. Live examples of using the Fibonacci retracements. Again, all this information is being provided in this video, so make sure you guys stick around until the end. Make sure you guys are taking notes. But yeah, let's hop right back into the video. So I want to look at an example of a trade that I actually took live inside of our server, Team Bull. As you can see, what I ended up doing for this trade was I took this pivot high to pivot low right here. One thing that I do want to bring up is sometimes you will have a low point or a high point, like in this example, because I did have my low point right here, but I believe in the pre-market session, in the pre-market session, we ended up breaking below and then setting a new low before price started coming back up. So sometimes you might just have to redraw your retracement slightly. Again, we can look at different scenarios of that here in a few minutes. But as you can see, I took this pivot high, the previous day's high, down to the low point right here. Again, clear cut pivot high, pivot low, and then also the pre-market pivot high and pivot low right here. So we have two different pivot highs down to the same pivot low. And what I want you to notice is that there was a 61.8% retracement and a 50% retracement at the same exact point. So when this happens, what that's known as is a Fibonacci cluster, and it actually doubles up as resistance, triple, quadruple, however many Fibonacci retracements are at that level, that is how much stronger that retracement becomes, or that resistance or support point. So if there were 3 different Fibonacci retracements and all of them lined up at the same exact area, that is a very strong area for a potential reject. Or if there's 2, 3, 4 Fibonacci retracements at the same level to the downside and price is coming down, that is a very strong bounce point that you want to keep on watch. So again, pivot high, pivot low, pivot high, pivot low. As price started trading up into that Fibonacci cluster of the 61.8 and the 50%, I then broke price down to a 1-minute time frame. And as you can see on the 1-minute time frame, price pushed through and immediately started selling off right back down to the downside with heavy volume, confirming the entry short and a stop loss right above 323. And as you can see, this thing traded all the way back down into the low of day. That is why I love using Fibonacci retracements. Your entry is always so precise. Your stop loss is always very limited. It lets you know the exact levels to keep on watch. All you have to do is confirm the trade with the price action. Now, had price traded back up above that 323 to 323.10 area, you would simply exit the trade and then move on to the next. And another example, you can see on QQQ that I took the previous day's low up to the pre-market high, and I had 2 bounce areas, one at 316.14, the other at 315.45. Breaking it down to a smaller time frame, the 1-minute time frame, you can see as price came down to the 61.8% retracement, it ended up bottoming out. Very heavy volume on the reclaim, confirming the entry long. And then from there, price moved around like 315.6-ish up to around 316.10, coming back down. And then again, looking at the price action, bounce, 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 confirming an entry to the upside. And then from there, as you can see, price ripped up. And then the last example that I'm going to show you, as you can see, taking the opening high down to the low point right here, you got the 50% retracement and then 61.8% for a potential reject. As price started trading up into the area, it broke through the 50% retracement, but then as it came up to the 61.8, it rejected it, very heavy volume. As a result, you could have gotten short, and then price ended up selling off all the way down into a low of around 305 when your stop loss was around 307.2 to 307.3. So that is what I like to see as far as entry criteria. Again, I don't think I brought this up, but if I did, just make sure you really make note about this. If you are taking a pivot low to pivot high, you are looking for a bounce. So pivot low, pivot high equal bounce. If you are looking for a reject, you are taking pivot high to pivot low. And as price trades up into the retracement, you are looking for a reject. So that is it for entry criteria as well as stop losses. Depending on the time frame chosen, like I said, your stop loss might be a little wider, but if it breaks through the retracement, whether it be a bounce or whether it be a reject, and then reclaims the opposite side with heavy volume, that is what confirms my trade. It makes it higher probability if there's another Fibonacci level there, or maybe VWAP, 8 EMA, 21 EMA, whatever it may be. If there are other areas of confluence, it does make it a higher probability area for a potential reject or for a potential bounce. And then stop loss is simply right on the opposite side. Again, the reason why I love these Fibonacci retracements is because we could get our stop loss hit 2, 3, 4, 5 times in a row. But as soon as we can hop into a trade at the retracement and then ride that trade out, squeeze out the profits, we're going to make back those losses plus more, because the stop loss, if you really master sniper entries around the fibs, you are going to get some of the best possible entries, and your stop loss is always going to be very, very tight. So that is everything on Fibonacci retracements. Now, I do want to talk a little bit about Fibonacci extensions, which you can actually utilize as potential price targets. So I use them a lot when stocks are breaking above their all-time highs. You can also use them intraday as well. So let's just say that you were going for find a good setup on QQQ for a 5-minute. Let's take a look over maybe right here. Yeah, so as you can see, price ended up rejecting right off that 61.8, and it actually ended up trading to the downside. Now, what Fibonacci extensions do is, instead of potential resistance or support points, the Fibonacci extensions, what they do is they give you price targets that you can aim for. So again, you know, whether you're swing trading or day trading, you can use them on both. The way that you're going to use the Fibonacci extensions is, first off, this is where it might get a little bit confusing, but if you take this pivot high to pivot low right here with the retracements, you're looking for a reject. But if you were to take the pivot high to pivot low with the extensions, you are looking for a push into those areas. So you can see that it actually put it above those levels. So we'll talk about that here in a little bit. And then I don't want to confuse you, but if you're looking for price targets to the downside, again, say we're looking for that reject, what you would do is you would edit the properties and then put on the 127 and the 1618. That is personally what I use as potential price targets. So as we can see right here, if we delete this, we have our Fibonacci extensions to the downside, giving us price targets. And then with the retracements, we have areas of potential rejects. So if we were to get short on this trade on QQQ as it came up to the 61.8 and rejected off of it, you could get short, stop loss right above this high point right here, which was at around 322.56. And then going back to your Fibonacci retracement tool, taking the low point to the high point and then adding those extensions, that can give you a price target. So I'm going to show you how you can draw these Fibonacci extensions. I'm going to show you in a way that hopefully makes sense, but you're doing the same thing. You're taking a clear-cut pivot high and pivot low, or a clear-cut pivot low and pivot high. So as we can see on QQQ on the daily time frame, we have this clear-cut high point right here at 313.92, and then this low point right here at 285.14. I am sure we made a 50% retracement right here. So as price bounced off that 50% retracement, say you were swing trading, it bounced off the 50% retracement, which confirmed the upside move with a stop loss set right below here. Now, what you could also do at the same time after you get your entry is actually take that pivot high, pivot low, and you can add your extension, your 127, your 1618, and you can get yourself a price target. So as you can see, as soon as price came up to the 127, it respected it as a price target and price pulled back. So that's a really good example of how you can use the extensions. Again, all you're doing, pivot high, pivot low, and then you're adding the extensions instead of the retracements, and you can use them as potential price targets. So now if you were looking for a downside move, let's just say that I think price rejected right off the 61.8 right there. So because price is rejecting off of the 61.8 and you're looking for a downside move, what you can actually do, I don't know if it actually did it this time, but you can put on your extensions and then you can use that as a price target. So in this scenario, unfortunately, it didn't hit it. That's why we have to use multiple time frames to confirm these trades, because remember, what did we bounce off of? The 61.8% retracement off the monthly time frame on QQQ. So that's why multiple time frame fibs are very, very important. But with the Fibonacci extensions, like I said, you're drawing it a little differently. So in this scenario, you'd be looking for a reject. But if you were looking for an upside price target, you would add that 127, that 1618, and you would be using them as price targets to the upside. So it came right up to the 127, right back down, right up to the 1618, right back down, which again had confluence with that 327, which was that 61.8% fib. So another question I get asked a lot when it comes to the Fibonacci retracements is, which fib is better to use, the 50% or the 61.8%? How do I know to add a little bit at the 50% and then add the rest at the 61.8? And here are the answers to those questions. If I'm using a smaller time frame fib, so like maybe a 5-minute time frame, and as you can see, if we were to just take this pivot low to pivot high right here, you can see that the 50% and the 61.8% retracement is so tight together. So because of that, if price were to come down and confirm the trade off the 50%, I will start my position, maybe half the position, maybe a little more. If I think price still has room to go to the 61.8, that's when I would do like a partial position or whatever it may be, and then add the rest if price comes down to the 61.8, because the retracements are so tight together. And because they're so tight together, I mean, 15 cents, 16 cents is not a lot when it comes to the option. Now, had these been very far apart, like let's just say that the 50% was at 324.66, and then the 61.8% retracement was all the way down at like 323 or 324, that's very far away. So as a result, I would look to take the trade at the 50% retracement only if it confirmed the entry, and just use the same rules when it comes to the stop loss. If the stop loss is hit, I will then watch price at the 61.8% retracement for a potential entry. If it gives me the entry, I'll take it. If it hits the stop loss, it hits the stop loss. But if it confirms it at the 61.8 after I've been stopped out at the 50, I will take the trade. But again, if they're very tight together, you can use it kind of as a start the position at the 50, add the rest to the 61.8 if it does confirm the trade. If price comes down and it confirms it at the 50 and you go half size with the intention of adding the rest at the 61.8 and price just blows through the 61.8, well, you only had half of your position anyway, so the loss isn't going to be as large. So there's a lot of different ways that you can go about using these Fibonacci retracements, which is why I love using them so much. Now, bringing back up that 78.6% retracement, what I've been doing is I like to use it as a stop loss only on intraday Fibonacci levels. As we can see right here, price rejected right off that 61.8% retracement. Again, clear cut high down to clear cut low. Rejected off the 61.8, what you can use is that 78.6 as a potential stop loss. So if you ended up getting short, let's just say around like 325.10, you could use that 78.6 as your stop loss, so your stop would be above 325.6. Again, a different way that you can go about using Fibonacci retracements. I'm giving you guys all the information that you need. All you have to do is backtest and see what works best for you. But again, you can use this on multiple different time frames. If you see something on a 30-minute time frame, say you identified, I don't know, this pivot low to pivot high right here, and then you notice that price came down, bounced off your 30-minute time frame. Let's just imagine that the market is open, but it bounced off your 30-minute retracement. You confirmed it off the 30-minute time frame, where your stop loss is right below here, and you want to watch it on the 30-minute time frame as well. Personally, when I'm using Fibonacci retracements, I would say a majority of the time frames that I'm watching when using them, because I use them a lot intraday for SPY and QQQ, so mainly day trading. My swing trading strategy a little different, but I use it a lot on the 5-minute and the 10-minute, and then snipe the entries with the 1-minute. Again, I use a lot of the higher time frame fibs because they're higher probability, but use those smaller time frames to confirm the entries, confirm when I'm actually in the trade, and then determining my stop loss, exit points, take profit, so on and so forth. Before ending this video, I just want to show you guys one more example of a trade that I have taken in the past using the Fibonacci retracements. There's so many that I could show you guys because I literally use the Fibonacci retracements every single day. If you tune into the YouTube live streams, you watch me draw all of them. The Fibonacci retracements, I can't stress it enough, is my favorite trading strategy. So as we see right here on SPY, we had this clear-cut pivot high, pivot low on the 5-minute time frame. There weren't any other higher time frame fibs that I could use. So just took the highest point of price action down to the lowest point of price action before price started bottoming out. You can see that we had that 5-minute 21 EMA at that area as well, which added to the confluence to the trade, making it higher probability for a reject. So as price started coming up, again, watching that 1-minute time frame, because price broke right through that 50% retracement, I was not worried about it. But then from there, price came up to the 61.8, and as you see, broke through, reclaim, broke through, reclaim, which validated the short entry with a stop loss above like 403.40, 403.50. And then from there, price sold all the way back down into that low of 400.5, and I think it might have actually went a little lower that day. I can't quite remember. And then I also did put this slide in. When you're trading with the fibs, you also want to know, is your bounce or reject counter trend or with trend? If your bounce or reject is with the trend, you can expect price to move more in your favor, and you want to try to ride that trend as much as you can. But if it's a counter trend fib, maybe price just bounced off of a 1-hour fib and you see price is coming up to a 10-minute retracement for a potential reject. If you're going with that counter trend trade, you need to know that that is more than likely going to be a scalp. That's more of a position that you want to be in and out of the trade. But if price is clearly uptrending and it pulls back down to a bounce, so maybe on the 5-minute time frame, you know, price is just slowly trending to the upside, you see a potential pivot low, pivot high on the 5-minute, you draw your fib, it comes back down, bounces off that 5-minute fib. That's with trend, and you are more than likely going to catch a larger move in your favor. So as a result, in those scenarios, I like to squeeze my profits as much as I possibly can. Another thing I wanted to bring up in this video is if price recently bounced or rejected off of a key area, whether it be a really strong trend line, maybe like a daily trend line, a weekly trend line, or a massive area of just support and resistance, I've noticed that when that happens, that's typically when you want to avoid using the Fibonacci retracements, because that's personally where I've had most of my losing trades when using the fibs. A really good example was, I believe it was maybe like a month ago, the NASDAQ just came down to a trend line, bounced off of it. It was a very important trend line. I ended up taking a pivot high to a pivot low with my Fibonacci's. Yes, price gave me the right thing to look for in the entry, but ultimately it was a losing trade. So as I've gone and journaled through the losing fib trades, a majority of them were losers because price had recently bounced or rejected off of a key area. So again, keep that in mind. Don't get faked out when using the fibs. But if price hasn't recently bounced off of a key area or rejected off of a key area, the fibs are still in play. Again, learn from my mistakes, and I just wanted to throw this into the video. That way it helps you guys avoid losing fib trades going into the future. And we can actually take a look at a trade that I've taken where I made that mistake of trying to bounce or reject after price rejected off of a key area or bounced off a key area. But in this example, I ended up trying to do a bounce on SPY based off of ES, but very recently ES rejected off of a key area. So as we see right here, this 4200 was a major area of resistance on ES. I believe we also had a fib level up there as well, like a higher time frame fib level. So that was a very key area for price to reject off of. Now from there, what I ended up doing was taking this low point right here, the lowest point of price action before price started pushing to the upside, to the highest point of price action before price started pulling back. Now, as we can see, price came down towards that 61.8. The lower time frame did confirm the entry, but then from there, it completely smoked right through the stop loss. So again, when you are using your Fibonacci retracements, before you enter that position, if it does confirm the trade, you need to look at the overall macro view of the market. Did we just bounce off of a key area? Did we just reject off of a key area? If the answer is no, then the fib trade is valid. If the answer is yes, then you more than likely don't want to take that trade, or if you do take it, just use a smaller position size. So again, don't make the same mistakes that I have. But yeah, that is going to wrap up this Fibonacci video. The video is currently 1 hour and 13 minutes. So there's still so much more that I can talk about for Fibonacci. So if you guys do want part 2, definitely make sure to smash that like button. Make sure you guys are subscribed to the channel. Comment down below letting me know that you want part 2. But other than that, everybody have an amazing rest of your day. I hope you guys found a lot of value in this video. If you guys did find a lot of education inside of this video and you are interested in learning more about my overall day trading and swing trading strategy, make sure to check out my 450-page book on Amazon titled The New Age of Technical Analysis, where I also talk about the fibs, but I also talk about how to find basic support and resistance, all the indicators I use, specific day trading and swing trading setups that I like to look for, and so much more. So again, if you guys do want to learn more about my overall strategy, make sure to check out The New Age of Technical Analysis on Amazon. 450 pages, rated I think like a 4.8 out of 5 star. That link will be down in the description. And again, I appreciate all of you for watching this video, and just know that these long form educational videos are going to continue to come to this channel. I'm very excited to continue to teach you guys. Everybody have an amazing rest of your day, and I'll see you guys in the next video.